morning to our viewers. I welcome you to February edition of CITN Taxation and Youth. It has been very exciting edition we have in January, and this month we expect our guest to do justice to the topic of today. And quickly, I will give you the topic for today before I introduce our guest. The topic for today is status of BEPS. What is BEPS? That is BEPS is a base erosion and a profit shifting in Nigeria. We want to look at the administrative overview from the Federal Inland Revenue perspective. Before I move on, my name is Dr. Adeyemi Ayodeji, and I have with me my uncle, Mr. Sheson Okunade. You are welcome, sir.
It is a great pleasure to be on the February edition of CITN Taxation and Youth. And Ayo, it's nice being with you. And our guest also a very quality time. So without wasting time, we'll go straight to our guest for today. And it's no other person than Mr. Kehinde Kadeshemo, FCTI. He is a Deputy Director with the Federal Inland Revenue Service and is the head of Treaties and International Tax Policy Division of FIRS. Mr. Kehinde, good morning. I'm glad to have you today.
Good morning, Mr. Sheson. It is my pleasure to be here. Good morning, Mr. Ayodeji. Happy to be here with you.
Yeah, nice to have you here this morning. We so much appreciate your presence in our midst this morning. So without wasting so much of our time on the topic, I saw you're trying to give the definition of BEPS, but I'm sure you'll be in better perspective to say it so that we don't drag it off and front. And we want to say, what is the current status of Nigerian implication of OECD-based erosion and profit sharing BEPS action, and how has Nigeria aligned its tax policy with the international BEPS guideline from the tax administrator's standpoint?
Thank you, Mr. Sheson. It's a good topic we are discussing this morning, which is the base erosion and profit shifting, and how Nigeria has fared, the status, what we have done and what we have not done in implementation of the rules. We all know base erosion and profit shifting are tax planning schemes that are deployed or employed by multinationals to reduce the taxes they pay by reducing the tax base or shifting the profit from one jurisdiction to another jurisdiction where the income will likely be taxed at lower rate or may not be taxed at all. So, and that is where the name comes from. The base erosion is part of it, is where taxpayers use schemes to reduce the tax base. Then the profit shifting is when profit from one jurisdiction is taken or shifted to another jurisdiction, which we most times call the tax haven, where those income will not likely be taxed. And why do they do this? They do this generally to reduce, at the end of the day, the level of income tax that will be paid in the jurisdiction where that income is generated. And at the end of the day, overall, the MNE will pay a lower taxes than what they are expected to pay. So what's, going back to the question, what have we done in Nigeria? When the projects, so is a tax planning scheme, the tax planning scheme. So what international body did in 2013 under the auspices of the OECD was to come together and design actions to mitigate or to control these tax planning schemes. So in all, there were 15 actions that were set up. And at the end of the day, the action plan was set up in 2013. And the reports or the outcome of the action plan plans were released in 2015. So by 2015, we had 15 reports detailing different actions or different recommendations on the different action plans. And the action plans, as I said, they are 15. And what we did in Nigeria was in 2017, the government then, the Minister of Finance, set up a body, the BEPS, which was called the BEPS Implementation Committee, which I happened to head the secretariat then. And the responsibility that was given to that committee was to review the reports of the 15 action plans and provide recommendation to government and on how to implement those action plans. And at the end of the day, most of as of today, most of the action plans have actually been implemented. And I think I will go through them one by one. There are 15, so I will try to as many as I can cover before because of time. So if you go to action one is on the digital economy, the tax challenges of the digitalized economy, and the reports unfortunately did not give recommendations, but it identified what jurisdictions could do or what jurisdiction has been doing. And what Nigeria did was to dissect that report on action one, and from there we're able to bring out the SEP rule as so the significant economic presence rule we are implementing today was a fallout of action one of BEPS. Also, we have also, in respect of VAT, because it's also a component of that report, we have been able to implement the simplified regime because you will recall in 2023, in 2022, we published a guideline on the simplified regime or for non-resident suppliers of services, digital services to Nigeria. So that guideline is also a fallout from the action one of BEPS outcome. Then for action two, which is on hybrid mismatch, what we did to control hybrid mismatch, majorly yes, we have some aspect of it that is domestic rule, but majorly it is mostly with treaty issue. And what we did in respect of that action was to amend our treaty model to include what we call the transparent entity rule in our treaty model under the Article 1, Paragraph 2 of our tax treaty model. So if you click our treaty model now, you see under Paragraph 1, Article 1, Paragraph 2, you see the transparent entity rule. And not just that, the treaty we have negotiated subsequently, all those treaties have that transparent entity rule embedded in Paragraph 2. Also, we have the savings clause in Paragraph 3, which confirm that nothing will prevent Nigeria to tax its resident, assuring or emphasizing that Nigeria has unlimited taxing right to tax its resident. Then if you go to action 3, which we have not implemented presently, which is the control foreign entity rule, that one is all things being equal, will be implemented under this finance bill because one of the proposals that have been included, which the charging provision has been included for subsequent implementation through a regulation, that is the secondary legislation. Then if you go to action 4, which we have also implemented, which is limiting base erosion through interest deductibility. We recall that in 2019, we brought the interest deductibility rule as a schedule under CITN, and it is actually Schedule 7 under CITN. So that schedule is actually an offshoot of Action 4 report of BEPS. Under Action 5, which is a preferential regime, what we did was, because it's majorly to control tax haven, to ensure that countries don't harbor preferential tax regimes. So under that action, our free trade zones have to be peer reviewed by the OECD because we are a member of the inclusive framework, and we submitted ourselves for review like every other inclusive framework members. And our free trade zones was reviewed and was found to not be a preferential regime. Then what we also did, because Action 5 has two components, which is preferential regime, and it also have a component on exchange of rulings. Through our EOI mechanism, we have also commenced the exchange of rulings, meaning that if we give, there are 6 classes of rulings. If you give any of those rulings to your taxpayer, you are expected to spontaneously communicate it to the other jurisdictions where that taxpayer has related party. And we've commenced the process. In fact, we commenced this January the exchange of rulings on the Action 5. Under Action 6 and 7, they are treaty-based rule. Action 6 is to prevent tax treaty abuse, while Action 7 is artificial avoidance of permanent establishment. And those two were implemented through our treaty models and treaty negotiations. And one of also a mechanism to also implement was Action 15 through the MLI. That's the Multilateral Convention to swiftly implement best outcome in tax treaties. And we signed up to the MLI. And under our MLI uptake, we adopted all the treaty anti-abuse rule. We also adopted provisions that will prevent artificial avoidance of permanent establishment. And if you also look at the tax bill, presently, one of the provisions under the provision that allow for tax treaty implementation is to also include the PPT, the principal purpose test. So we have the principal purpose test embedded in our law, which is also one of the key recommendations or outcome of Action 6. Then Action 8 to 10 is they relate to transfer pricing, which we have also implemented. It was our offshoot. I mean, the transfer pricing regulation we have in 2018 was actually an offshoot, or was amended in that 2018 to incorporate those BEPS changes that were recommended from Action 8 to 10 of the BEPS outcome. Then Action 11 is on statistics, which we have not, I don't think we have done much in the area of statistics reporting. Not generating statistics for Nigeria now, but statistics reporting in respect of BEPS issue. Under Action 12 is on mandatory disclosure of tax planning. What we did, when we look at our law, then CITN, you see under this Section 12 of CITN. Section 12 of the CITN contains an element of mandatory disclosure where it requires taxpayers to disclose to tax authority their service agreements. But of course, this doesn't actually capture or doesn't effectively capture the recommendations under Action 12. So the new tax bill that we have presently has provision to ensure mandatory disclosure of tax planning. So it has not been effectively implemented now, but by the time the new tax bill comes into force, we have effective implementation of Action 12 on the mandatory disclosure of tax planning. And also, there's also automatic exchange of tax planning structures and PIC structures under the OECD, which we have not joined presently, and it's one of the things that we might likely join later. And what that will do is it will ensure that when a tax planning structure is disclosed, that can be easily exchanged. And what we do for us is that when a multinational abroad disclose tax planning strategy, that will effectively be communicated to us through the EOI process, the automatic exchange of information process under the MCA on mandatory disclosure rule for us to have information on that tax planning strategy and opaque structures. Then under Action 13, we know Action 13 is transfer pricing, documentation, and country by country reporting. And the aspect that has to do with transfer pricing documentation, which requires that the approach of TP documentation will be master file, local file, and CBC reports. That was implemented under the our TP regulation 2018. So if you pick our TP regulation 2018, especially in the schedule, if you go to the schedules, you have the requirement for master file, local file, and then CBC reports. Then we also have the specific regulations that capture also the country by country reporting to ensure transparency for MNEs in Nigeria, and to ensure that we also take advantage of those disclosures in other jurisdictions. Then Action 14 is on dispute resolution under tax treaties, which we have also implemented. You will recall last 2 years ago, we had to publish a new guideline, a revised guideline on MEP, which simplified the process for a taxpayer to come forward and take advantage of the mutual agreement procedure process for ease of dispute resolution. So what it means that if as a taxpayer you are taxed under the tax treaty, you are subject to tax under the tax treaty, and you think you shouldn't be subjected to tax under the tax treaty, or you think you were not properly taxed, you don't need to go to court. What it means is that you can go through the MEP process, which has been simplified, and where, in fact, we also submitted ourselves for peer review under the Action 14 peer review, and of course we passed. We reviewed, our processes was reviewed to ensure that we have an elaborate process in FRS for us to do MEP, and the process, the confidentiality requirements, the support to taxpayer in form of regulation, guidance, were found to have complied with all the processes. Then the last one, which is Action 15, is on the MLI, as I spoke about, which in fact we participated in developing the MLI, which I also happen to be the person that represented Nigeria in the ad hoc group that was saddled with the responsibility to develop that MLI. And after the MLI was developed, we signed the MLI, although unfortunately we have not, our National Assembly is required to ratify, but we are still going through the process of ratification. So that is where we are in. So you can see that most of the action plans, we actually implemented them, and we have implemented them successfully.
Thank you very much, Mr. Kainde. You have given an overview of what FRS have been able to do so far. But the way you are saying, it's as if there is no challenges, everything just went smoothly. But I must commend you for a very a good job done, and the details we're able to put in for this explanation. At least I understand that Action 3 has not been implemented, 11 has not been implemented, and Action 12 has not been implemented. Now, for those that you have implemented, take us through the challenges you encounter in the course of implementation. I know there must be a lot of them in the course of implementation for our viewers.
I agree with you. There's nothing without challenge. And if you want to start from the basic, if you look at the best projects, each of those reports were in volumes. You have some of them running to 500 pages, some of the reports. And it's going to go through those reports. You first understand them before so you have to first read the reports, understand, and after understanding them, be able to replicate them in your own rules, form a policy around them, then develop either regulations or legislation provision, put it in your legislation, and after you put it in your legislation, it's one thing for the tax authority or representative of the tax authority or representative of Nigeria to understand. But it's another thing for taxpayer to also understand, because the taxpayer should be in a position to implement. So having the taxpayer to also understand it, providing assistance we need to provide to them, then after those, then get them to comply. So those are processes that sometimes take a whole lot of time. And even some of the rules, if I go to Action 1, for instance, the significant economic presence rule, we still have the challenge that because if you levy under the CEP rule, you levy tax on the non-resident, and the non-resident fail to pay the tax, somebody that is not in your jurisdiction, what option do you have? That's one of the challenges. So under CEP rule we had, and also under the VAT rule, which is the simplified regime, we have to rely so much on voluntary compliance. So I remember in the process of developing the simplified regime guideline, we had to even engage with business communities under the business at OECD to ensure that we develop a rule that they are willing to comply with. Because if you develop a rule that they don't comply with, you can hold them because they are not in your jurisdiction. So we had to have several engagement with them to have their buy-in before and ensure that the rules is something they are able to understand and comply with before we came out with the rules. So it's a whole lot of engagements, a whole lot of reading, understanding, engagement, and a whole lot of voluntary compliance. Now, for the others in the domestic law that we have put there, also, the challenge with compliance, which is if the taxpayer has opportunity, they will not comply. So the good thing now is that with technology that the service is deploying, we've been able to have compliance with most of these rules with the help of with technology. So yeah, I agree with you that it doesn't go without challenges, but we are as much as possible surmounting those challenges.
Thank you very much. And I'll quickly go to the next question, because we need to also now analyze the jurisdictional analysis of BEPS. So how can you provide those comparative analysis on how we have done compared to other jurisdictions that are implementing this BEPS project together? Over to you, sir.
Okay. Thank you for the question. When the BEPS action plan came, it was divided into 3.
Okay.
The 15 was subdivided into 3. We have some that what is required, we are called minimum standards. Minimum standard means all of you, if the moment you are a member of the inclusive framework, then it is under you must implement. You are either in or you are out. So that is minimum standard. And in that regard, everybody has to implement. Then we have what we call the common standard. That now not minimum standard, but common standard. And those that has to do with common standard means if you are going to implement, we implement the same way. So in that instance, we don't really have much differences. It's either you are implementing or you are not implementing. But if you are implementing, you have to do it the way others are doing it. So this is different from the minimum standard. For minimum standard, as long as you are a member of IF, you must implement. For common standard, you are either implementing or not. But if you are implementing, this is the way you must implement. So where we have differences now is the other ones that don't fall under the common standard or minimum standard. And those ones, for instance, Action 1, if you look at Action 1, there are so many recommendations under Action 1. We have each recommendation now, I said practices. And under it, we have the significant economic presence rule. Okay. We have some implementing by withholding tax. We have some implementing by equalization levy. And then we have some implementing by the digital service tax, which is DST. And for us, the approach we have taken under Action 1 was to through the SEP, the Significant Economic Presence Rule. So, because some of the view that SCP and DST, because some they will tell you, Nigeria is implementing DST, or why is Nigeria not implementing DST? So DST and SCP are actually options under Action 1, and based on our circumstances and what we have, our analysis, and the committee is, I said earlier, the work on the BEPS implementation strategy, we adopted the set rule. Then, if you also go to the VAT implementation, there are also options for implementing. For instance, what they do is to implement only on individual. Some do combined scope, and for Nigeria, what we have done is to implement combined scope, meaning that the rule apply to both individual and businesses. That's what we call B2B and B2C. So we have B2B and B2C covered under our simplified regime, while for some jurisdictions, their focus only is on the B2C. So those are some areas where we have differences, but in all, is not to be a disadvantage, but it's meant to enable you look at your domestic situation and circumstances and choose the one you want to implement. If you also go to Action 4, which is limiting interest deduction, allow for group ratio or fixed ratio. And what we have done was to go for fixed ratio and not the group ratio. So these are some of the differences we have in implementing the rules in Nigeria.
If you permit me, definitely I will not refer to you as Mr. Kehinde. I would rather say Professor Kehinde Kalida, because you've taken us back to class this morning. Exactly. And I can see the reason a lot of people will always, when they hear about things relating to international taxation, they want to take pause because it's deep, and you have actually explained and given explicit, deep explanation to some of these things. If you are just joining us, we've been guesting the Deputy Director from Federal Inland Revenue Service, Mr. Kehinde Kajeshemo, whom this morning I've conferred the title of a professor. You need not to go to class, because with this, you are much more than a professor. And in no distance time, we'll be opening floor to our members to ask 1 or 2 questions. But let me go to this question, and I want to quickly recognize Vice President, who is on this call this morning, Mr. Innocent Oagwa. Thank you for being there, and other council members, you are specially recognized. Professor Kehinde, permit me this morning to call you that name, because you have that the skill, the value that you have given to our people. Do you think tax professionals and the business community should be aware of this implementation of the BEPS regulation? What has been the potential impact on our domestic revenue generation?
Thank you, Mr. Sheson. Let me start from the issue of Prof. I think all the kudos will go to FRS, because if your organization give you the opportunity, because if I'm not in FRS, I don't think I will be able to have knowledge of this. And if I'm not in this function and performing, maybe I will also not have the opportunity to have the knowledge. So I think FRS identified me and put me in the function and gave me all the necessary resources to also thrive in that role. So
I love that, Mr. I love that, Prof. I've given it to you. Give it to FRS.
That's very good.
All right, thank you. So to come back to the question on taxpayers. So the rules are, most of the rules are out, and taxpayers are aware of most of the rules, and they are complying with some of the rules. I mean, most of them are complying, but for those that are not complying, there's always challenge of compliance in Nigeria. It's either voluntary compliance or we have to enforce compliance. And to enforce compliance, we know the challenges we have in Nigeria, ranging from the fact that you might not be able to see the taxpayer, or to, even when you see the taxpayer, to charge the taxpayer to court, the court processes, and so many things. So we have a whole gamut of those issues. But overall, what has compliance looked like? The compliance has not been bad, because you can sync the compliance with BEPS with also the compliance with all the other rules in Nigeria. For instance, if you are talking of the limitation on interest deduction, as long as the taxpayer file returns, they have to comply with that Schedule 7. Because if they don't comply, the office, when they are reviewing their the returns that is filed, they will discover and they will bring it up. For country by country reporting, for instance, if you fail to comply, the possibility of you being penalized is there. And what we have done, for instance, in some of the rules, CBC, for instance, was to upgrade the penalties. You know, some complain that why is the penalty under transfer pricing and CBC? Why do we have very huge penalties? Now, for CBC and those transfer pricing, you expect them to file returns, and returns that will require them to employ consultants. And so if for me to comply with the rule, I need to employ consultant and pay, for instance, 10 million. And if I don't comply with the rule, the penalty you are giving me is 10,000. What will I rather do? I would rather don't comply. I'm going to pay your 10,000 naira. So that was why, if your penalty is low, then you are going to have a weak compliance. So what we did under the CBC and the transfer pricing rule was to elevate the compliance, the penalty regime, so that we have good compliance. And that is what we have also brought into what the committee that is working on this tax reform bills, that's what they have done, to also see as much as possible to elevate compliance, so that to elevate penalties, so that we have improved compliance. And another thing that the service has done recently is the deployment of technology. And the deployment of technology, and we also have in the new law that is going to kick in, also improved deployment of technology. You will recall that we have a provision there on fiscalization of VAT and e-invoicing, which involve deployment of technology to implement VAT. And what that will do is that it will bring so many spheres into the tax net. And when you are in the tax net, because if you are not in tax net, you can't be talking of you complying with BEPS. If you are out, or every other thing about BEPS or about any other things, you are out of it. So the starting point will be how to first bring you into the tax net. And if you are in the tax net, it's easier to now be asking questions whether you have complied with BEPS or not. So once the invoicing and the fiscalization regime will also help us to do, apart from the VAT, is the fact that we now have many taxpayers in the tax, all those that have been trying to avoid coming to the tax net. The rules, the technology will ensure that they are turned up and they come into the tax net. And what that will do is that it will enable us to also now ask further questions. For instance, if you are in because of VAT, we can now ask questions: have you filed your income tax returns? And if you have filed your income tax returns, is it properly filed in compliance with all the rules, including the BEPS rules? For those that need to related party, the moment you see that you are in the tax net, we can now ask questions: you are a related party, so have you filed your TP returns, or have you filed your CBC returns? So presently, yes, we acknowledge some challenges about compliance, but what we see is that compliance is improving as we are deploying more technology. And by the time we fully deploy technology under the tax reform bills, we have limited level
No,
of
I'm
tax
not compliant.
avoidance.
That's a great one, Mr. Kajeshomo, and it's been a quality time. I want to open lines for individuals to ask questions. I saw a question of which I believe you've actually attended to, talking about the challenges that are faced with BEPS.
Yes.
But pardon me to welcome George as he asks his question.
Unmute yourself, Mr. George.
George, can you please unmute yourself to ask your question?
Thank you very much. Like the uncles have said, this was a wonderful presentation. So I want to commend the institute and our paper presenter. Thank you. God bless you. Now, in the course of the presentation, our presenter was quite fast a bit for me, because I was trying to make some jotting, valuable things to put down on the paper, but I couldn't. So I don't know if it's possible to have a copy of it sent to us after.
Okay. Pardon me, Oga George. You know, when a professor is dishing out some of those things, if you are not a stenographer, you struggle to go along. But one thing we can assure you is that go to our YouTube channel on CITN. You can watch and watch and watch as many times as you can listen to. Kelechi, can you unmute? Kelechi,
yeah. Thank you very much. Thank you very much. Thank you to CITN, our anchors, and Professor Kehinde, permit me in quotes, as earlier on alluded to, for a job well done. Please, for my sake, I would like to find out, so much has been said, even on this call, about BEPS. Now, what I would like to know is, how is this operationalized by FIRS? By that, I mean, who and who are supposed to do filings? What kind of filings are they supposed to do? Which office is responsible for all these? Where are they? What are they doing to enlighten the people who are supposed to comply with these things? You understand? So please, can you share that with us?
Okay. So you note that, Prof, for us, while we proceed. Yeah, we have two other hands up. Wisdom, can you unmute and ask your question, please? Wisdom, are you there?
Yes, I'm here. I have to say thank you to Prof. He has done justice to this topic. The way he spoke, those of us who are students from OECD school here in China, we are blessed with the wisdom that you just shared with us this morning. Well, my question goes to the fact that for those other countries who don't disclose information to us in respect to non-disclosure rules under automatic exchange of information, which I believe is also a challenge to the service on how we handle action, is it action 5 or action 12 on the exchange of information. What do we do? What has the service done in order to manage such a challenge of non-disclosure of information to the service from the other jurisdictions, which we may have applied to for information, and they're yet to comply for the applications we have made to them for information? How do we handle such a challenge from the service?
Okay, thank you. And I think on the final note, let me welcome M. Olusegun. Please unmute and ask your question.
Thank you very much, sir. Thank you for this very insightful presentation. It's very interesting to see how these action plans 1 to 15 has been aligned by the FIRS in both the existing tax regime and the proposed reforms. My question is in relation to a comment Professor Kehinde said about FIRS reconsidering its initial stance on non-alignment with the BEPS Pillar 2. Can you please speak more on that? Is there internal consideration to revisit this decision by FIRS? Thank you very much, sir.
Okay, thank you very much. And let's take this, Prof. Barry is saying that you mentioned that the principal purpose of test PPT 1 of Action 6 recommendation has been included in the new tax bill. What other provision related to the digital economy have been incorporated into the tax bill?
In fact,
So
this question is seen ahead. We have this question
in the
to ask him.
Yeah, so you help us do justice to some of those questions within our stipulated time.
Okay, thank you for the questions. So let me take them one by one. The first one is on filing.
Yeah.
So, I said there are 15 actions. So each of them some don't even require filing, and some requires filing, but the filing requires differ depending on the rule. So if I take them one by one, if you look at Action 1, for instance, which is we have implemented the SEP and VAT simplified regime. For this SEP, the filing is done through the tax promax, and the filing process is similar to in fact, you are filing income tax returns. So for non-residents that are covered under the scope of the SEP, what they're actually filing is income tax returns, and the process to file the returns under SEP is the same process as is we have in Section 55 of CITN. So if you are a non-resident that is covered under the simplified regime, you are company covered under the SCP, that's Significant Economic Presence Rule. It means that you are liable to income tax in Nigeria using that rule. And you go to, on the normal day, we already know that the due date of filing income tax return is depending on the accounting year end of the company, is 6 months after the year end. So if you are obligated to file returns under SCP 6 years, not more than 6 months after your accounting year, you go to the SCP, you file your returns just like any person filing income tax returns. Then for the simplified regime, that one is also the obligation of non-resident, not local entity. And also, like women filing of VAT returns, what they do is they go to tax promax and file their VAT returns as a non-resident under the simplified regime rule. Then for Action 2, there's no returns that is required to be filed there because, as I said, it's a treaty provision, and we have the transparent entity rule embedded in our tax treaty. So if you are claiming tax treaty, you go through the process of claiming tax treaty. One of the things we comply with is the transparent entity rule under Action 2. Then for Action 3, as I said earlier, we have not implemented that one. But by the time we implement, yes, it might require, of course, it will require filing of returns, but the returns to be filed will be in accordance with CIT. So when you are filing your CIT returns, the provisions that relate to the control foreign entity there, you have to embed it, use it to, implement the rule in your returns. When you are computing your tax, implement the rules. So there's no separate returns to be filed apart from your normal CIT. For Action 5, the returns to be filed is actually the tax authority that file returns under Action 5, meaning that we, Nigeria, the tax authority of Nigeria, will send returns of ruling that it has done to other countries. And then the tax authority of other countries will also send rulings to Nigeria. So there's no obligation for taxpayer under Action 5. The obligation is actually for the tax authority because they have obligation towards other tax authority of other jurisdiction. For Action 6, there's no specific returns to be filed there. Same thing, Action 7 is about treaty, putting those rules and embedding those rules in your tax treaties. For Action 8 and 10 is TP rules. And we know those who file transfer pricing returns are the related entities, entities that have related parties. What we call associated entities. And the requirement for them filing their TP returns is that it's contained in the TP regulation, and they do so yearly. How do they file it? We do it through we used to have a separate process or software for filing, but now it has been migrated with the Tax Pro Max. So, and the filing date is also the same as the filing date of their income tax returns. So as they are filing income tax returns, they prepare their TP returns, they also file it together with the income tax returns. And the filing, as I said, is not no more as it used to be that you have to do it separately. You do it with your income tax returns. And as you file it, the office that need it, because our international tax department in Lagos, they actually need that TP returns for compliance purpose. They will pick it up from the tax promax and use it the way they need it. Then for Action 12, it has not been implemented, but when it is implemented, the service will provide the process for filing the returns. For Action 13, which is already implemented, that is the CBC returns. It is not for all companies. The companies that are required to file CBC returns, they know themselves. They are related parties, that's multinational enterprises, that have 750 million euro turnover and above. So there are not many, there are few entities, and those entities, they file their returns through the tax promax also. Okay. Action 14 doesn't require returns filing. It's only those that have an issue with how we have implemented tax treaty that need to come forward and put in a request that, for instance, if we have treaty with UK and you believe that UK has not treated you properly under the treaty, you submit your request or your concern to us, and the tax authority will follow it up with the UK authority. So this is how the Action 14 works. Then Action 15, which is MLI, there's no returns to be filed under that one. Mm-hmm. Then the second question is on disclosure of information. We have a body that was set up after the BEPS outcome, which we call the Inclusive Framework of BEPS. And presently, that body contains more than 140 countries. And if you are part of that body, because some of the, as I said, some of the actions are minimum standard. So for instance, Action 13 is a minimum standard. That means the moment you are a member of BEPS, those 140 something jurisdictions, you must file your TP, your country by country reports. So even if you are a tax haven or you are located in Caribbean, you must file that reports because you are a member of that body. If you don't want to file returns, you will not be a member of that body. The same thing, the report that is filed under the automatic exchange of information, which is the common reporting standard, as long as you have joined that body, if you are not in, yes, it's not by force, but the moment you join, then the requirement is that you must file returns. And Nigeria is a member. We file our returns as a jurisdiction now, because that report is not supposed to be filed by individual. So what happens is that under CRS, the banks in Nigeria have a specific returns they file to us. And after they file the returns to FRS will exchange that reports or returns to with other countries. The same thing, for example, let's pick a tax, one of the countries, maybe Barbados. So if the banks in Barbados will also file returns of our resident persons who the tax authority in Barbados, and the requirement is that the tax authority in Barbados must exchange it And when they are exchanging, we get that information. So I can confirm to you that the tax authority in Nigeria actually have information more than what you think. Some people will think maybe by the time the tax authority get to use the information at their disposal, you will understand that now there's no hiding place for anybody. Because if I can assure you that if you have an account in Barbados today, except the tax authority don't want to use it. If you have an account in Barbados, by the end of the year, Barbados is filing returns, FRS has information on that account. So the expectation is that we'll get to a level that our process is able to analyze those information, use them, and enforce compliance. Yeah. That's on filing of returns. So presently, we might not have too much challenge on returns filing from tax havens. They actually, most of them are actually compliant. Pardon?
Help us do that within 2 minutes because of our time.
Okay. FRS not aligning with Action 2. I don't think I mentioned that we are not complying with Action 2, because what I said was that Action 2 is mainly a treaty issue, and we have a provision under paragraph 2 on the transparent entity rule. So we're actually consistent with Action 2. Then if the issue is on principal purpose test, as I also said, we have in our treaty provision on principal purpose test. And I said we are taking it to another level, because the new tax bill will include provision on the principal purpose test. And lastly, on the, I think there was a question on the digital economy. And I think the question was whether we are implementing the digital economy or how we are implementing. As I earlier explained on Action 1, the fact that we have the significant economic presence rule, and we have the VAT simplified regime. Those are the two instruments we are using to implement the digital regime in Nigeria presently. And we have such provisions. In fact, we are bringing the whole SCP rule. SCP rule is presently implemented through a regulation. The expectation now is that with the new tax bill coming up, SCP rule will be fully embedded in the tax bill and not just as an appendage in the regulation.
Thank you very much, Mr. Kennedy, for all the explanations given to all the questions asked by our participants. Before I let you go, let me quickly give some information to our members. The examination portal for the next diet April has been open. If you know someone that wants to join CITN, please inform the person to visit www.citn.org to register for our exam. Then we are having orientation program for newly practicing member of the Institute on the 14th of February 2025, and they will share the link for all members to participate, to also learn one or two things. So be on the lookout for the link for you to attend that program. Then we have 3 editions of our mandatory professional training program. One is coming up on the 11th of March in Lagos, which is the first lap. It's going to be organized virtually. The second one is coming up on the 20th of March in Abuja, also virtually. And the third one, before the March end, which is March 27, 2025, that one will take place in Enugu. So make sure you register and earn your credit hours as we commence 2025. Then the last information here is the pre-induction orientation program scheduled to hold in Abuja from April 22 to 23, 2025. If you want to register, the application is on. Log into our website, do your application, and the council will approve your application as the case may be. Thank you very much.
While continue with that, as soon as the council approve your registration with the institute and you carry out the induction ceremony, there will be an induction on the 24th of April at the Rainbow Event Marquee in Abuja. We've said it is time for the northern region to prove to us that they can put their might in turnover and let the South give a return on the visit, because they've been coming to the South. It's time for us from the South to go to the North and have this induction ceremony. And on the final laps of our notice to our members, it gives me great pleasure to notify you of the 27th Annual Tax Conference coming up on the 12th to 16th of the month of May 2025. And the theme of our discourse this year is taxation for development, policy, law, and implementation. This will be happening at the Abuja Chambers of Commerce and Industry in Abuja. We want to recognize all our sponsors who have voluntarily given us a lead that they will be part of this program to continue to educate our members on the things, the current happening, the contemporary things in taxation. And we want to open it more to other people to say that the platform is still very much open for you to contribute to this. In case you want to reach the Institute, you can always call Dr. Kemi Oluwagbamila on 0908 088 8815. I take that again, 0908 088, that is 8 in 4 places, yes, and 15, 0908 0888815. And we will be happy for actually being part of our program. We want to specially appreciate our guest for today, who has taken us to class to, give an in-depth analysis of the topic of discourse, which is the status of BEPS implementation in Nigeria, the administrative overview. Professor Kehinde Kajishemo. Don't worry, I gave you the prof, give it to FIRS. Thank you very much for actually giving us an in-depth of this particular program this morning.
It is my pleasure to be here. Thank you so much.
And on that note, I am your anchor for today, Olusesan Okwande, FCTI, and my co-anchor, Dr. Ayodeji Adeyemi. Until we see you next month, the first Thursday in the month of March, we want to say, make sure that as member, you pay your subscription, because that gives you the platform of having future engagement with our institute, and you can see your institute flying higher. Thank you very much for being part of it today. We see you.